Ready, Tom? Hope you are. Yeah, it's definitely ready. Right, here we go.
Right, thank you, Peter. Thank you. Yeah, it's Tom Williams here, speaking to you from Worthing in Sussex, England. And it's lovely and warm. So it's not too warm, but nice and warm. So that makes us all feeling much better. That terrible cold winter all the time. Anyway, I've been looking at the S&P 500, and it's not really easy to analyze at the moment. It's been chopping and churning away, and widespread up and down and one thing or another. And usually that is when they're not in control. Soon as the professional side get into control of the market, then the spreads narrow and you start seeing a trend developing. Now, this software is very good at picking the trend up. When it's trending up, you see the blue bars, and the rule is to produce a blue bar, the close of the bar has got to close higher than the close of the previous bar. That's all. Don't worry about the highs and lows, just the close. Now they do that once they've got control of the market, because they have to maintain control of their positions. And the biggest danger to professional money that have probably thousands of contracts going is that even other professionals will suddenly appear and sell into their up move. And no professionals can afford to do that because it's too expensive. Anyway, so if the close is higher than the close of the previous bar, and you see it goes on and works for days on end. Look at the daily chart, our weekly chart, it's going on for months with the trending system working. On following that, you allow for at least, well, you allow for one down day where the bar's red. And then usually that bar is on a narrow spread, usually closes in the middle, and the volume is reduced. And if there's been a red arrow, and you see that red arrow tested, it's a very powerful sign of strength, indicating that market's going to go up. Okay, and the bear market is the reverse. We get red bars when the close is lower than the close of the previous bar. Forget about the whipsawing. Now this chart, can they see my chart, Peter? Okay, now this is a half hour. Now, there's no special reason. Peter just put the half hour up. I didn't ask him to. But you could read all these charts. But see, what's wrong here is you've got supply present, look. There's a high volume. Don't forget, volume is activity going on. Now, although you've got a green arrow here, which would suggest strength, the next bar is black. That means it hasn't gone anywhere. And that means that on that activity, there must have been supply present. There probably was buying there, but there was supply as well. So nobody was in charge. Nobody was in control. Nobody really knew what was going on here. And that's why the bar is black, because it shows it was level. It shows that the volume was high, activity. Right, now the next bar did go up, but look at the low volume. So although it went up, look, it didn't go up much, and that's no supply. There may be an automatic signal on some of the other time frames, I don't know. No demand. Now professional money would see that straight away. So they say to themselves, oh, so it's really, really weak. Okay, so we'll have an upthrust and we'll catch all the stops, mislead as many people as possible, and put the fear of God into as many people as possible. and we can make some money out of that. So up they go, nice up thrust, look. There's no signal, automatic signal on that, but there might be on other time frames. And on that, produced a red bar because it was down, down, down. So the market's falling at the moment. And notice this bar here, look, there's no demand. There's not a lot going on at the moment. And the whole reason is that, not to mention these highs here, there'd be weakness up there, but there was supply. On that bar, professional money saw that, right? So they mark it up. That's a definite up thrust in a weak market. Now that's a 30-minute. Now before I look at some other time frame, you could read all of these time frames straightforward like this. Nothing too clever, just supply and demand. Are there any questions about this particular chart? 30 minutes. Not at the moment, Rita says, right. Got to give people a chance to get the brains working. It's a bit early for a lot of you, I know, in the morning. Right, so we'll look at a different time frame and see if we can 30 minutes, 20 minutes. Well, let's look at a 7 minute. I mean, these odd numbers are often quite interesting. Whether they are or not, I'm not sure, but they do seem to be quite interesting. Now, your 7 minute chart, look. Now, there's, of course, that's been marked up. This is an example of the market being whipsawed up and down on these wide spreads. Nobody's in charge. Nobody's got control. Nobody's quite sure what's going on here. But they mark it up here and down. Look, that's what we call a top reversal. So it's a warning. Strong markets don't do that. Now, admittedly, a green arrow's arrived. That's because it looks like a test. But on saying that, right, the next bar and even the bar of that is not up. So that's a very good example there of a failed test. Right? So it's definitely not a test in a rising market. It looks like a test in a rising market, but the reason why it hasn't worked, of course, because there's not enough strength in the background. There's no obvious buying here. This is a sign of weakness here. So they've just had this sort of test-like bar, and that's why it hasn't worked, because next bar is negative, this one's negative, and that one. And even that one, look. So once you see a test, actually that's quite a good thing you should keep in mind. When you see what looks like a test, if it was a real successful test, that market would have immediately responded, because the professional money know that there's money there to be made. And the fact is it hasn't, look, is definitely a sign of weakness. So you should really keep that in mind, definitely. I'm glad we noticed that. And it's just, it's come down, there's no stopping volume, look. Right, to stop this market we need to see a down bar, fresh low ground, spread narrowed. There is a little bit of volume there, and that's why it went sideways, look, but not a lot, look. Right, and every time it tries to go up, look, there's no demand. There'll be no demand on these blue bars. And it's just going sideways in a listless way. Nobody really appears to be in control. Right, let's have them. Here, I'll read it.
Thomas is asking, when would you want to short the failed test?
after that. Well, you never short. Do you say short or buy? Oh, I see what you mean. Sorry, yes. Well, I suppose in a way it's quite a good question, really. But you would short a failed test, right, if there was a lot of obvious signs of weakness in the background. And the way the market works, it's very devious and cunning. And if you miss an opportunity, right, if you miss opportunities, you're reluctant to get back in if you've missed it. And yet you might be right, and you might say later, oh, look. I mean, I was talking to Rita earlier on, we're supposed to be doing what they call a stock selection, which we can do, but Gavin's thrown us in the deep end without hardly any notice. And we're not sure even how to download what he calls a video. But, and we haven't got all the data. We need data of various things. But we will do a stock selection. But Rita was complaining this morning when she was looking at stocks. There was 2 brilliant stocks, right? And she didn't trade them, and they've obviously shot up. So that's what happens. And the market seems to revolve around that principle. And so it seems to do it automatically and deliberately. I think it just happens automatically. But with shorting, I would be very careful and only short. You've got to be patient when you see something obvious, because it's so easy to get misled. Stocks and shares, you'll find once we get going, are much easier to follow and really more profitable because they don't whipsaw quite so much. They're run by so-called specialists on the floor of the New York Stock Exchange. And I'm just looking at the S&P. We've got a bit of an up move here out of the blue. But there's no reason that should go up. I can't see any. There's a little bit there, as we saw, a little bit of stopping volume there. And on that, it's gone 1, 2, 3, 4, went sideways 6 bars. If you had gone long, you would certainly watch this up move now, not expecting it to go all that far. Because to go up, you have to have what they call a cause. And I can't really see much cause in the background, not to go up. So, but we'll watch it. Any questions?
Mitch, what stocks whipsaw less? Mitch is asking. What stocks whipsaw less? He heard you say that. We were talking actually. We're going to be looking at stocks on a daily basis, not on an intraday basis. So with a longer. Oh, do you want to say something, Tom?
Thomas said before that stocks should be traded normally on a daily basis, end of day basis.
Is that right, Tom? Yeah. Say that.
Well, the reason why they don't whipsaw is because we're talking about trading stocks on the end of day basis. You see, when we're trading the S&P, scalping the future here, it's so dangerous. You don't want to be in, excuse me, for too long. You just try to, you see strength coming and you buy it and then wait for it. It won't come off and stop going up until the weakness appears. But with stocks, we look at the end of day. And there are certain criteria which we will explain in these so-called videos that we send out with it. And you'll become experts in stock selection. It's all straightforward. There's nothing cunning, there's no secrets, there's no skullduggery, there's no inside information. As a matter of fact, when you're reading charts on stocks, you're actually reading inside information, which is quite legal because it's there to read. It's not information that's secretly been emitted from a company or something that you're not supposed to know, that you can go to jail for. None of that. This is inside information that's actually written to you in the chart, because a chart is a language. And once you learn to read it, you can read the language. May not be 100% clear all the time. Of course it won't. But that's what we mean by it won't whipsaw so much. But there, once you see a sign of strength in stocks, you've got to get in and buy them.
Yep, you've got to be brave. It's new to me, stocks, and I picked out a few and didn't get in because I'm thinking, oh, well, you know, this is new to me, and, oh, I'll just see what happens. And, yep, sure enough, I'm kicking myself now. But anyway, Carlos says, what is easier, scalping or trading short term for a few days? Well, we're all saying trading short term for a few days. Is that right, Tom? Yeah, scalping is great, an instant almost. But I remember actually Philip Friston, is he in the room? No. Saying once to somebody who was very new to VSA, what's the best thing to do when you're starting out? And he said really the trading on a daily basis rather than intraday is a good start, because it's slower, you get more time to think, you get more time to study what's going on, and you've got time to think about it. So that's what Philip said. Jerry has asked, Tom, you know, you're talking here about this thing here, this about supply and this. Yes. Jerry asks, with the supply, why not shake out to remove the floating supply rather than an upthrust?
Well, don't forget, you're looking at what's, this is the mid. Yeah, the E-mini look. Well, can't do that because you've got, this is backed up by the S&P 500. You've got the activity of 500 of the leading, strongest stocks in the world moving this index. That's what you're looking at. So you can't just shake that out. I mean, the reason why there's probably weakness here is because we've been in this bull move up for so long. It's now rolling over. The spreads have narrowed. There's a lot of supply. It's not just as simple as say, oh, we shake them out. I mean, it's like an express train tearing down the railway track at 100 miles an hour, and there's something wrong. Oh, just stop. Change that bulb in that toilet and let it go. You don't do that. You can't do that. You're talking about the S&P 500 here.
Before we move on, you were talking about stocks, and actually, Tom, on my blog, I put up, as I told you, a couple of stocks that, and Edmund had a question, and I think it's a good question to ask of you, Tom. Can you explain what is meant by picking stocks that are acting as strong or stronger than the parent index? Is it merely price performance over a certain period of time, or the fact that it has better price action? For example, say the parent index has a rise of 10% from the beginning of the year. If stock A has risen 50%, followed by a drop of 20%, versus stock B has a steady rise of 20%, do both of these stocks behave stronger than the market?
Well, you could visually see it quite easily a stock that's acting stronger than the index. Because the charts are in front of you, you know what the S&P 500's done, and it's very quick and easy to see a stock that's acting stronger.
Right, so this is AutoZone. Can you explain to Edmund why that is acting stronger than the index?
Now you can visually see that that particular stock is acting stronger than the index. And not only that, look, there's a fantastic test there. That's definitely going to tell you it's going up. And also, I mentioned this several times before, whenever you see a red arrow, right, and one or two of the next bar are tested, there's a test, look, red down bar, volume's low, that's in bullish, you're going to go up. And you see that very, very often. And that's an opportunity, if you can remember that and spot that. So you don't look at that red arrow there and say, well, right, I'm not going to, that's weak. Which it is at the moment, but the professional money see that and they test it, look. And if you see a red down bar, narrow spread, close in the middle, and the volume is clearly low, is that low?
Yes, definitely.
Right. That means that the big money behind that move is not interested in lower prices at all. And that's why it goes up like that. And there's another test look. And it's a good example of how, if you've got a lot of money in these stocks like this and you're moving them, you've got to be very careful what you do. That's how they make their money.
Continuous contracts. We're just looking for Gordon's request, US light crude. In the meantime, Tom, Mitch has a question about the ES, the index. I would have thought having had a highest close ever yesterday would have pulled innumerable traders into the market. That doesn't seem to have been the case. Any thoughts there? I would have thought having had a highest close ever yesterday would have pulled innumerable traders into the market. That doesn't seem to have been the case. Any thoughts?
Yeah,
let's go. We'll go across. Well, let's put the daily up. There.
What's he talking about, the index?
Yes. Yeah, sorry. Yeah.
Well, the thing is, why should you expect that to bring in a lot of people? It's clearly that's this daily chart. Look, look how that blue 20 system has been working. Look, there's a test, up, 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 up. There's a red arrow, but there's no test. But there's weakness there. How do we know it's weakness? Because the spreads have narrowed. And we're really above this old high here. Now, I'm not sure what that line is that's been drawn there.
That's just where your cursor is, I think. Click somewhere else.
Oh, yes. Is it?
Oh, yeah, and that line is the line to do with today. This line is just your cursor.
Yeah, okay, so you can see how they're struggling to hold the market up here. And there's no real obvious. If we saw one of these up bars, a narrow spread, a very high volume, I'd say definitely that's coming off straight away. But all it is, they're holding this market up. Probably, I don't know, I don't listen to fundamentals or read them, I don't take too much notice of them. But Gavin seems to, and he said, oh, the Fed's pumping a lot of money into the market and all this stuff. But it should show up on the chart, anything that's done like that. And a sure sign of weakness is up, narrow spread, really high volume. Once you see that, you know that market's coming off. But right now, look, it's just been pushed up, held up. A little bit of no demand, perhaps. Spreads are narrow. But there is a bit of effort to hold that up. But for you say, why don't people move in? That's what you said, Rita?
Yeah, why haven't they gone into the market?
Well, who are they? And perhaps they will come in. You know, I mean, if they do, they actually do rush in, then they will show up on the chart. It'll be an up bar, a narrow spread, very, very high volume. And then that could even bring up end of a rising market signal. And don't forget, you have to see a reason, a cause for these markets to stop going up. Same as you have to see a reason and a cause for the market to go up. Okay?
You got that chart up, Peter, did you? About light crude? Right. This. Okay, Gordon would like you, Tom, to look at the light crude, which crude oil, this is it, hopefully. Shall I put 20 bars up, Tom? Or? Doing nice. Look at that. 10. Oh, okay, hang on.
That's better. Well, the only way professional money can make money is to get movement in the market. Movement they can recognize and understand. And once it's been going up like this for some time, in these sort of bull moves, look, a time will be reached when they think, oh, I think we better take some profits here. Now, there is a little bit of profit taking here. I mean, on that bar, look, it's an up bar. The volume has increased. It's not a lot, but it's there. Notice now, this is interesting. Notice this red arrow, and notice that the very next bar is a test. Look, it's a red down bar, and there's no volume. There's no supply. And that's why it's gone up. So you've got to keep that in mind. There's a little bit of selling on that bar, admittedly. Spread's narrow. It's closed in the middle. Volume's high. And they've moved it up here, and this looks like a bit of no demand. But it doesn't mean to say that's definitely not bullish, bearish. But that's interesting. So you've got this red arrow, look, and it's been tested, just what I told you on the previous chart. And that means it's going up. There is a little bit of hesitation here, but nothing I would say to worry about. If you have a position there, that could easily go higher. But
Following your simple trending system, of course, it would still be in.
yeah,
That being low volume.
yeah. Don't forget, the simple trending system is that the close has to be higher than the close of the previous bar. Now they do this so they don't lose control. If they have to mark these things up, they have to help it up. You know, it has to be shouldered up. Imagine somebody trying to climb a house or something on the outside. They have to be supported. So each step is higher than the previous step. And you know, professional money, that's how they ensure they don't lose control of the move. Because they'll recognize supply and demand when they see it straight away. So the thing's trending up, look. You've got this red arrow here, which is tested. That's a very bullish sign. Now, admittedly, there's a little bit of supply there, a little bit of no demand. Look how they marked it up. There's a yellow box up there. It's probably, it must say no demand. Yeah. So you've got to be aware of that. Now, if that comes off a bar or two, then goes up on no demand again, then you would expect it to come off a bit. But there's no serious supply in that at the moment.
I'm going to look for SCTY for Carlos. Let's hope we've got it here. We'll have to go in over here, I'm afraid. SCTY. So we looked this up. This is a solar company, Peter?
I think so. I'm not sure.
Well,
So.
is on the Nasdaq? This is a solar company, SCTY. I'm afraid we have to use this chart because Tom hasn't got it on end of day. Daily. So can you? How many bars, Tom? Do you want to look at? Yeah. We'll look at the. Yeah. Do you want to?
Highly unlikely that to go up through there.
Tell them.
Right.
Tell Carlos.
Well, there's a hell of a lot of supply present here. Back here, look, here. That huge activity or volume, look, on over several days. And it made this market go up, churn around. But that's weakness, that's supply. So it's come off, but there's a little bit of support back here on the end of day. But you would not expect that market to go up through that supply. I'd say almost impossible to do that at the moment. Put less bars up, we can.
Less bars, 20?
20. That's it. Now you can't see that. I've got 20 bars up because I can see things better. There's a little bit of buying back here, look. Look. There's the so-called stopping volume here. There's the high activity. Then it churns sideways. We expect that to be tested sometime. So here it comes, down, down, down. The same level as here, look. And now the volume has disappeared, more or less. That means that the bit of selling or supply that was present has disappeared. And that's all they want to know for a move. And that's why they took it up, look. But as it goes up, it's getting nearer and nearer that terrific supply to the left. And there's supply on that bar there, look. And that's getting up to the highs where we saw that terrific volume to the left. That is nearing. It's certainly not a stock which you go long on. Okay.
Why do you want to? Oh. Should we? What? Do you want Tom to look at that? Okay. Tom, Peter wants you to have a look at this. This is the 5-minute chart of the Dow.
Right. Now that's interesting. 5-minute chart. 5-minute chart of the Dow. Right, in other words, you're looking at the S&P 500 because that Dow is part of that. Now the thing is, it's not a good example, is it, of stopping volume. Although you've got high volume, There must have been a little bit of buying there. What you need is that volume here. If that volume was under here, see that there is a clear down bar. Note the high is not much higher than the close of the previous bar. Note the spread is not really all that wide and it's clearly down. Now that almost looks like the start of a test.
Test after a shakeout.
Not sure where it got the shakeout from. But don't forget, you look at the computer here. Now that there is a sign of strength, admittedly. Right, but it's not stopping volume, is it? And you're looking at the S&P 500. Although it's called a Dow here. So it goes sideways, it's come down. There was appear to be some buying there. But the buying, whenever you see a top tail to these bars, that's very negative. But saying that, it looks like some buying taking place. And it'll probably go up a little bit. All right, Peter?
Yes, Peter here. The reason why I asked Tom, I was wondering, I saw what Tom described there, and I just wondered to myself, would I go long if I was trading now? And I would say no. And the reason I wouldn't go long straight away is because I don't fully understand the chart there. And I would be concerned this could be supply. And therefore, if it is going to go up, I mean, it might go up, but if I'm to trade it, I want to see some further evidence that the supply has been removed. And as Tom was saying really was, if that bar had been over to the left to replace that bar, more or less, high volume, and then it came over, arched over, back down here with lower volume, just like here, you could say, well, it looks like the supply has been diminished, and therefore it may well go up, so it's been tested. But why I asked Tom was because we occasionally do see this scenario, and it might go up, it might go down, but it's not clear to me.
Why is it that Tom doesn't have
Type in CTS to the real
well, yeah. CTAS. Well, I think it's just check CTAS. CTASD. Oh, cool. Oh, wow. Okay. Right, this is CTAS Daily. Edmund, do you know what sort of company it is? It's a daily chart, Tom, of CTAS. Edmund would like you to take a look at it.
Daily chart?
Daily, yes.
Up to date yesterday.
Oh, it's up to date to yesterday.
But this here is today, isn't it, Peter? Isn't it? Yeah.
Update to yesterday. Oh, well, yeah. It's been whipsawing around something terrible, hasn't it, look? But on saying that, every time a red arrow comes in, look, comes off, but it's tested. There's a lot of supply present, but there is a lot of supply present in this stock. There's obviously a lot of interest for it to go up like that. But there's what looks like potential stopping volume there, look. You've got a surge in volume here, activity. It's down, well, I wouldn't say it's fresh low ground, but it's down low, right. So there must have been some buying on that. It responded up. Now we're looking for a test. I'd like to see the test come back down to this level. It hasn't. And there's supply present, look. So you'd have to go very cautiously with this. Although it's gone up, right, there's supply present in the background. And if you should, it's best to sidestep these sort of stocks. They may look promising, they may sound promising, but you've got supply in the background. Now, though it may go up a bit like this, right, normally when there's supply present, these sort of stocks don't go very far. And they can suddenly reverse and come back down.
Right, we were just looking up. They're called Cintas Corporation, and they supply companies with things, ancillary equipment and services. So that's them. Mitch is asking, wouldn't that stopping volume be similar to the previous chart with a lot of activity at low levels? And Edmund is saying, look at 200 bars. Yeah, so Mitch says, wouldn't that stopping volume be similar to the previous chart with a lot of activity at low levels? And I'll put up 200 bars. Crikey, what was that there? That must have been.
Trending up.
This is trending up. Right. Do you have any more to say? It's very choppy.
It's very, very choppy. I mean, do you want to ride something like that? Very hard work. And also, you need to compare them, which we'll show you when we start looking at stocks. You should compare them with the group indexes. I mean, what group does this come under, I wonder? Industrials. But you must trade these stocks in harmony, not only with the parent index, in other words, the index where this is lodged, but also the group index, which is very important, because that way then you get the power of a bull move within the group as well. And that works. But we don't have that data. That's why we haven't produced much yet. But we will have. I believe Gavin's working on it for us.
A question from Stephen. Trading the futures. Do you use the continuous charts or the specific monthly charts for your VSA signals?
For the signals? Yeah. Well, all these charts tend to work the same way, whether they're cash, a future, continuous, or what. And there's no rule set specifically aimed at any particular group, because this is basically how the markets work. They all work the same way. They all work on supply and demand. And that's why they tend to come up on any time frame in more or less any instrument that you have the high, low, close and volume. Rita's putting something up.
I was looking for it, I couldn't find it, so it's coming up here now. Right. Okay.
Now this is obviously trending down. This is obviously weaker than the index, look.
It's called GTI and TP by Newton. Apparently Steve Phillips has been talking about it.
Well, it looks like a stock actually weaker than the index. Not the sort of stock that you get excited over to put on your portfolio to go long. Now, notice too, immediately, that the high volumes on these up bars. Now that's not healthy at all. Oh, no, I can't seem to move the cursor. Here it goes. Yeah, now see those two blue bars, look. Or that one, look at that one. Look at that terrific high volume. That's supply. And although that's really why the market's done this, it's just floated off sideways, there's probably a bit of buying in there, but it's on the upside. And the upside means that supply is in the market, because professional money don't do that. They can only buy on down bars. That sort of down bar like that, narrow spreads. That's because of the size of their orders. They can't hear the supply. And it's actually weak of the index. So it's a very, very poor stock there to put on your long watch list.
Question just come in from Jerry. What is the importance of fresh high or low ground? Is it that support and resistance has been broken, and or is it that the chart is more accurate to interpret since the volume is less influenced by the background or trapped in traders? Do you want me to read that again, Tom? Or what is the importance of fresh high or low ground? Is it that support and resistance has been broken, or is it that the chart is more accurate to interpret since the volume is less influenced by the background? Well, you talk about, don't you? You talk about it has to reach.
Well. Don't forget you're dealing with the action of human beings. And when a stock that you might be interested in suddenly hits a new low, normally you're not interested in it. Normally, you see, the big hurdle you have to get over is your thoughts, the way you behave to this movement. And this is why these charts more or less look the way they do. They're reacting to the thoughts of human beings. And when a stock has been falling for a long time and the news is probably bad, are you personally geared, ready to buy something, right, that may be fairly obvious? But because you're not geared up mentally, most traders miss it and leave it. But new lows, new highs, it's all very well having a new low and new high. But what was the volume? What is the volume? And what happens to the market on that volume? That's all I look at.
On this chart, Tom, still on GTI, Mitch has a good question here actually, because he says, I would have been fooled into thinking of that high volume bar, that blue thing there, Tom, as a spring. Could you emphasize the difference? As a spring? No?
No, it's miles away from a spring. As a matter of fact, it's nothing like a spring. The idea of so-called spring, that's why I never used that sort of terminology originally. A spring is a shakeout. That's all it is. Now, it's a shakeout only works when you have a period of it going sideways, like say it did here, look. Say it goes sideways like this for a few weeks, right? And there's some fairly obvious signs of strength coming in. Then you have your spring or shakeout. So they ram it down. That triggers stops off, frightens people. The traders have made the right decision and want to go long, but it triggers them, shakes them all out. It's really a shakeout. But this is nothing like it, is it? It's an up bar anyway. A spring of shakeout has to be on down bar. Has to be down here. This is an up bar. So it's nothing like a spring. Nothing like it at all.
Getting caught up here, don't we? Right. Ming says, can we have a look at BA stock? There is news now. Where would that be, Pete? BA. Boeing. BA is Boeing. Oh yeah, did I pick this out as one acting stronger than it's on my list, acting stronger than the index. So Ming would like us to comment, but is this a little bit of something come in at the end here? This is up till yesterday, but yeah. Oh no, hang on, sorry. I've gone and what have I done? Sorry, that's a good one. Oh, we did that one. Right, Boeing. Come on, we've got a problem with this end of day. It's not, you have to create new chart. Right, oh, yes, I did pick it out. That's Boeing. So, any comments on that, Tom?
Well, it's certainly actually as strong as the index, if not stronger. I'd like to see it, pardon? What?
As a matter of interest, Tom, I'll just say. So, sorry to interrupt you, Tom. I just looked on my laptop here. I've got some data here, so I noticed that unless there's a serious error somewhere, BA has come off. Yeah, it's dropped back down to below this level here. Yeah, it's come down to here today. It's kind of whoosh down there, and it's fiddling around now. So unfortunately, we can't show you on Tom's screen here, and of course Tom can't see it. So that's just so you know. That's why I think the question was asked, because the market fell right off on news on extremely high volume too. Well, I say not extremely, ultra high volume. It's Boeing, the aircraft manufacturer.
Well, you know, I never listen to the news, so I wouldn't know. But Boeing is having trouble with that aircraft. Has something else happened? I wonder.
Yeah, there's just some news, but things not saying.
Is there some news?
What is the news? Does Mick know?
Come down all the way here. It's just going up here.
Well, that could easily be news, marked down on news. I mean, but certainly acting stronger or as strong as the index. There's the red arrows here, but immediately there's a down bar, look, no supply. So that's all okay. But there seems to be lots of no demand going on up here. The only weakness I could see is a bit of no demand here. It's up bar on narrow spread, look. Unless they've got trouble with that aircraft. That latest one they put out. Remember where the batteries were catching fire?
Yeah. Don't know what the news is. But...
If that's dropped heavily, it must be on some news. I don't like the sound of it. Where they mark it down deliberately on the back of the news. That's quite possible. Hmm?
London.
Do you want to say things?
Yeah, go on.
Yeah, so just as a bit of information there, according to the BBC News, 15 minutes ago, runways at London's Heathrow Airport have reopened after a fire on a parked up Ethiopian Airlines Boeing 787. So I don't know if this relates to the batteries. I wasn't following it, but it could well be, because I think the 787 is the newest one. So obviously that was news that didn't go down very well somewhere.
Have we finished on that one? Have you got any more to say on that?
Not really.
I'm moving on to Hiran is asking, could you look at spot forex euro 1 hour? Is there a shakeout? So that's the long. That's it says 1 hour. Yeah. Yeah. So this is the euro 1 hour, and this is. I'm just showing Tom the bigger picture so far, and now we'll need to bring it down a bit to 20. So it's saying, is there a shakeout?
Well, there's something
that?
here.
Yeah.
There's an attempted shakeout there. But apparently the supply pressure. Well, it looks like, you're quite right. Here, this looks like a shakeout. Right, well, they marked it down. The volume is massive, right? And on that, the next bar's gone up. And even that down bar, look, there's little or no supply present, seen by low volume. That should be bullish. It did go up. But this looks like a test here. So this could easily be bullish. But it's got half an hour to go and there's supply present. That's the problem. This high volume means, yes, it's okay. This could be a shakeout. But this could easily be bullish because this looks like a test. And there's no supply on that bar there, look. So it could easily be bullish, this. What are we looking at?
The euro 1 hour.
Oh, the euro, sorry, yes. But the euro's quite difficult to follow. I find things like the Australian dollar far, far easier to follow.
That's an interesting question from Paul. What is your general opinion on holding a stock position through its earnings announcement? For example, Citigroup, which is the one that we picked out, Tom, it reports early next week. So what is your general opinion on holding a stock position through its earnings announcement?
It's not a good idea to back your analysis on things that they're going to announce, because they're going to announce things which favor their positions. They're going to ready to, if necessary, whipsaw their stock on the news, mark it up or down. So you really need to analyze the chart properly and don't expect them to help you by giving you so-called news. Why should they do it?
It's funny actually, just Peter's whispering in my ear. He's watching the chart of BA, a 15-minute chart, and noticed that at 15:30 our time UK, sign of weakness of supply came in. The fire started at, it went sideways, and then the fire started at 4:30, which then there was a no demand. It's quite a nice little setup, but we can't show because Tom doesn't have it on his screen. And then, of course, then it shot down. So funny that should happen an hour before the fire. Anyway, yeah. Okay. This will be the last. Oh, gosh, there's a big question here. Okay, from TP, when you have a widespread down bar on high volume, what makes it close on the low when a lot of people are shorting into the hole while the market makers are having to take the other side? Seems like it would be just an exchange of people equally buying and selling. Did you got that?
It's not a good idea trying to add intelligence to your analysis. You've got to read the chart and believe the chart. And don't start thinking along those lines of that you just mentioned there. Even Peter here, I remember 2 years ago, I say, look, Peter, you're having a bit of problems because you're too damn clever thinking about these things. Believe the chart. Read the chart. And don't worry about all the so-called ins and outs, because you'll never find out the truth anyway. God knows what they're doing. It's of no interest to you. But the truth lies on the chart. Believe me.
Okay, we're running out of time, so this is the last question. I hadn't forgotten your Park. I just thought it was a good question for the end. The volume on the SP is light today. So up there, Tom, is the daily chart of the ES. So the volume is light, which seems to indicate that the smart money is not buying today, says Park. Of course, my initial thoughts are, well, it's Friday, but
Well, you often see that. You've got to be very cagey Friday. Peter, you could draw fresh trend lines on that chart. Take these off, because now they're getting a bit old, stale. Right, and then first two lows, first high. I can't look at the chart without trend lines on them. That's first high there. That's it. Now you can see with that fresh trend line, it's drawn properly. That's a Wyckoff trend line. But you're on that top trend line, and that's why the spreads are narrow. They're pushing. They're trying to get up through that, but there's nothing happening. It's rolling over. You wouldn't expect that market to rush up. Certainly not today. And I would have thought next week it would roll over and at least go down to that lower trend line. Anyway, I'll say thank you very, very much for listening to us. And we'll be doing the newsletter tomorrow. And we're also doing our selection of stocks, which should be interesting. Once we get all the data and get our act together there. So I say thank you very much.
Yep, okay, we'll see you next Friday. Well, Peter will. I'm away. I'm away next Friday. And if there was any questions that we couldn't answer, we didn't get time to answer, do put them in the forum, and during the week we can answer them. So have a great week, and see you next week. Bye bye.
Welcome to GoToWebinar, Web Events Made Easy.